Hey, good morning. Bob Trade Genius here. It's the 8th of December. I apologize if I cough a little bit under the weather here today, but here's some really important things I want to talk about. And I know this is a YouTube videos I do for a trading site that we own and stuff like that, but this is a little bit more important and a little bit more macro. And I've been telling people for as much as they want to listen that this area right here in 2018 was the blow off top. This is a linear regression line here. It's standard deviations. This is three deviations from the center line. And when this thing blew off here and came back in, my 401ks went to cash, and they've been sitting there untouched and untraded. And because what I think is going to happen here is that we're going to get about a 25 to 30% discount coming up over the next year, if not sooner. And I'm going to show you another chart here saying it could be really fast. And then we went the whole rest of this year on institutional money here trying to create a liquidity event so that they can get out, and they achieved a double top. And then we crashed down through the two standard deviation line where you would expect a bounce, and we got it. But then that bounce failed. And then all the jawboning started to come out against the Fed, against the trade talks, China, Trump, yada, yada, yada. And we pushed back in, and everybody thought, okay, hey, typically, statistically, when you push back into a channel, you come back up to the center line. And it didn't work. It failed, came up again, and then we had this pop on Monday, and everybody thought all clear, and then basically the rest of the week it's been just this, basically an engulfing candle, and so now it puts a lot of things at risk. We're coming down here, and if this line right here does not hold, is that my personal view is that this whole move from 2016, let me zoom back out, was artificial in the sense that we had central banks around the world intervening in the stock markets directly. The Swiss, the Japanese, the Chinese, the ECB, and God knows what our Fed does, because we can't peer inside of their balance sheets. But they created this move here because China went into turmoil. And the other thing that happened too is there was in my view, a coronation from Obama to Hillary Clinton. And so they just did this move, which just defied logic. And I think this whole move is going to get unwound here. The Federal Reserve made a huge error. I don't know if they believe their own press, or if they decided to do this on purpose, or whatever their rationale is. It's wrong. And they were reducing a balance sheet and raising interest rates at the same time when they know how much debt's out there. And they pricked a speculative bubble, but this thing's going to blow up in their face, and we're going to be down. My view, I think, for this round is this will get tested for sure, if not breached. And the reason why I say that is because the jawboning is not working anymore. Now it's put up or shut up time. So unless the Fed starts to rapidly start QEing again, is that you're going to see the stock market just go into free fall. And we have basically an analogy to that. They call them analogs. And I saw this yesterday on Twitter, so I decided to show you guys. Is that this is that move I was referring to, okay, for 2018, where the institutions were creating a liquidity event for themselves, and this is them getting out right here. Now we're at a point now where I think Friday kind of scared people, and I wouldn't normally show this chart, but both Trump and the Federal Reserve and the Chinese all jawboned our market on Friday, to no avail. Every time they talked, it rolled over. and I was trading futures on it, and I was trying to short it all day, and I was just had to be so fast because I was expecting these tweets, and then when I saw the tweets weren't having any effect, I'm like, oh my gosh, we're gonna probably close on the lows, and which means Monday might be really, really scary. And so expect follow through on Monday, and then this is what happened in 1987, and they had a little bit of acceleration. You got a bit of a bounce, and then that following week it just basically started to fall apart. And so I'm not saying this is exactly what's going to happen, but we have an air pocket from basically on the SPY from 260 to 180 where it was just totally contrived. It was passive investors being led by the collapse in what's called volatility. And so nobody was doing anything. It's just that the algorithms were saying volatility is low, buy more. And then you had central bankers like the Swiss in there buying up our biggest stocks. It's called market cap weighted. And what happens there is that you have the biggest stocks can lift the whole index with it. And so this whole thing was happening, and it was just like, a magic carpet. And now that those basically stools are gone, and so this whole thing's going to unwind. So I just beg everybody to be careful, and I was saying if you can't get out, at least hedge yourself. And we bought some SH this week and closed it for 5%, and we've been in gold and miners for trade purposes, and then basically day trading for income for me. But here's another chart I want to show you that let me go down to it here. This is where I think people are going to eventually run into. Okay, so this is the gold to the SPX chart, and I was telling people too, I said something happened at the end of August. We hit a bottom of the channel, and basically if you shorted the SPX and you bought gold, you'd be up 20% on your money right now. And so this is putting in a bottom, whereas this is historically pretty low ratio from stock market to gold contracts. It's gotten down lower than this, but pretty much when it gets in this range, you get a pop. And now we're looking for this thing to also try to recover back up into the 2016 area here, this is right before they intervened with China. So we got this move here, and then the top of that move to here. So I'm looking for at least another 20% move in the price of gold as opposed to the price of SPX. Now gold can just stay flat like it did this week and let SPX fall, which is okay too if you're in those things, or you're going to see money move directly into these assets, and we're going to start getting a run. And I think the Federal Reserve in December is going to tell us that. So I think the Fed's done. I think they're going to be easing sooner than later. You look what's happening in France. People can't get taxed anymore. Okay, people are sick of their governments. And I think they're going to have to start, as Trump says, give the people what they want. And I think that's what you're going to see. I think we're going to see hot money coming into the markets. And I mean, not the stock markets. I'm talking about the Main Street markets. People need cash. They need to get the debt paid down, et cetera, et cetera. But anyway, I just thought I'd share that with you. Just be really careful over the next couple weeks. I think it's going to get really wild. This crisis is geopolitical as well as financial. So things are going to come out of left field. And look, we had a great run in the stock market. Even if I'm wrong and you sit on cash for 90 days, I don't know how much wrong I could be versus how much right I could be if what I'm telling you plays out. And so I'm just begging you to be careful. Thanks for listening. You guys have a great day. And I'll point out some other things a little bit later. Bye-bye.